Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I've got the Bitcoin chart up for us to observe, and would you look at that? Would you look at that bullishness? We are just rocketing. We are rocketing to the moon. And if you guys think that this can be stopped, of course it cannot be stopped. That is just a thunderbolt just shooting up to the moon, and it's unlikely to reverse anytime soon. This is just a major, major bull trend. Whoops, chart was upside down. Okay, we're headed down. Yeah, we are pumping today. Of course, that should be expected. We did have a, what was this? Almost 50% drop since just a couple days ago, right? Am I wrong? Right? This is the 19th, and we basically fell off the cliff, a week ago. So we've just been falling straight down, and what do you know? We caught some support on a major fib, and we're bouncing, right? We're bouncing. Let's pull the fib out here. 786. Just like we got support at the 618 and at the 5 and at the 382 and at the 236, right? Just like we got deflected up here at the 0. We're finding support at the 786. Now, does that mean that this is reversal? Does that mean that we're going to the moon? Should you guys just flip to being completely bullish? No, but you should be traders, and you should have been trading this pump. Bouncing off of a fib like this is entirely predictable, right? In fact, I believe we even had the floor recovered, right? On the alpha channels. You can see these wicks. We actually never closed the candle body below the bloodline of the alpha channel. We did drip below it, but we bounced up and sat on it. And that suggested that perhaps we could pump maybe to the top of this channel, maybe wick a little bit higher, kind of bounce around. Sort of like what we did up here in this channel on the white line, sort of like what we did over here on the yellow line. See this touch, and then the final consolidation over here. A little bit more bullish on this purple line just above it. But in general, you can see it kind of kept to a range. And so it would be completely in line with Bitcoin's behavior to just take, a couple of these alpha channels and just kind of, consolidate for a while after such a dramatic drop, right? Dramatic drop, consolidate. Dramatic drop, consolidate. Dramatic drop, consolidate. It makes sense. Just be careful if people are trying to get you to FOMO into HODL positions. If you haven't watched my last video, I recommend that you watch the previous video that I made regarding, catching the exact bottoms, because the whole point is that you shouldn't be trying to catch the bottom. You're gonna end up catching a falling knife more likely than not, right? Like all of these guys who tried to catch the bottom, they caught a falling knife and they've got knives stuck in their heads because they tried to catch a falling knife, right? We're going to wait for consolidation. We're going to wait for some type of accumulation pattern, and it can take multiple weeks. It can take months, right? And then you can start to think about having a HODL position, and it should be in line with the stock market also putting in a floor, with the stock market also putting in an accumulation pattern. It shouldn't just be you trying to catch the bottom. You're never going to know where the bottom is, and it can always go lower than you expect. Let's go ahead and take a look at let's just take a look at volatility, see if anything's changing. Markets are closed, but we did close in a pretty volatile area. So perhaps this could come down on Monday or Tuesday when they start trading, or perhaps it's going to shoot up and the markets are just going to be suppressed completely, and probably everything's going to drop. To me, it looks like we're working our way back up, but you also have this kind of rounding here. But this kind of looks like a head and shoulders, right? You can kind of see this, like head and shoulders, which might suggest one more really good push, right? Into that just bloody zone of volatility, which could suppress the market. And so I'd be very, very careful with your positions just on a weekend. However, we are having a great, pump today. And again, these type of pumps should be expected. What's another reason why we should have expected this pump? I mean, it's pretty obvious. The market's closed on Friday, right? And the CME price for Bitcoin was 20,470. That's where the market's closed on Friday, right? The professional exchanges that close for weekends and holidays and evenings, it closed at 20,470. So it would make sense that if the 24-hour exchanges, used up a lot of resources pushing itself all the way down to the 786, that it might get a bounce back up into that area. And what did we push down to? 17,000, 17,500-ish. And where did we bounce back up to? 20,400-ish, 500-ish, right? Right in line with the CME price, right in line with that CME professional exchange Bitcoin price, which was 20,000, approximately 500, right? So we're kind of coming back to meet the professional exchange price. And, this could bounce around a little bit until Monday or Tuesday when the markets opened. I believe there's a Juneteenth holiday on Monday. And so on Tuesday, when markets open, this price might be just consolidating in this range, and the two markets might just meet back up. And then they're going to sink their energy again. It might take a couple weeks, sort of like up over here, to figure out, what what the game plan is, what the data is in the market. Do we get more PCE inflation numbers? Is it good or is it bad? And then that could potentially determine whether we drive down, potentially towards the 886, this area at 11,000, which everyone is targeting, which suggests to me it might not actually end up being the bottom, right? I mean, they're either going to push through it or they're going to stop halfway between the 786 and the 886. I mean, if they hit the 886 directly, I would just be pretty shocked. I'd be pretty shocked. It could happen. This is a pretty technical market, so it could happen that it comes down there. But more likely, people are just taking advantage of the 786 push by the 24/7 exchanges, on this holiday weekend and the high volatility in order to just do shenanigans over the weekend, right? So just be careful. I warned you like 3 days ago. This could be a very fake out move on the weekend. I warned you. We were going to have probably one of the highest chances of a fake out move all year with that quadruple witching on Friday and then a holiday on Monday. And of course, liquidity is already being dried up completely because of the way that the way that these markets are behaving. People are just fleeing out of the markets, and so of course there's a great opportunity for whale games, right? Market maker games, whale games, institutions liquidating each other. And what did I say? Like 3 days ago, I mentioned that we were going to carry out, right, this move that was pointed out by Eric Crown Crypto. And I learned this from him. I could probably just call it by myself now, but since he did call it first, I'll just give him credit for that. And the crossing, it appears to be over. The move appears to be over. We've got some rounding on the chart. If you really, really zoom in there, you can see that the volatility oscillator is underneath the EMA, right? So that suggests that this move is over. And what do you know? We reached the bottom and started to bounce back. So what's going to happen if that big, volatility move is over? Well, we might just have some corrective move, right? We might have some corrective move. We might get a little contraction, right? And in this case, expansion is towards the downside. Like this is just rapid, rapid expansion towards the downside. And so a correction, just a corrective move, would be towards the upside, right? So that's why you can see this type of a bounce. Just a reaction in the market. So be very careful. Now, it is possible that it's the bottom of the market. We don't know that until the next inflation data comes out. Nobody knows it until the next inflation data comes out. And if that inflation data is just incredibly good, then this was the bottom of the market. I can almost guarantee you. It would be the bottom of the market. I could almost guarantee you if that inflation number is just stellar. And by the way, I think it would have to be backed up by the CPI data 2 weeks later. The Fed does primarily use PCE data, which is the data that'll come out first. But the CPI data is released closer to their decision. And so just like this last meeting, the CPI data totally overruled the PCE data because it was so bad. The PCE data was basically neutral, and the CPI data was just too bad. And so they did a dramatic increase in rates, which just shot us down lower, right? Not dramatically lower. We had a crazy dip, but the market's, trying to figure out like what does it want to do with that information. They like that interest rates are rising and it can potentially shorten the length of a potential recession coming up because the Fed's actually doing its job by increasing those rates. That was what was needed. That was the bitter medicine that the markets needed. But they don't like that increasing interest rates suppresses the stock markets, right? And so it's a catch-22. It's like, instead of an angel and a devil on your shoulder, you have two devils, and you have to pick the lesser of the two evils, right? And so for the 75 basis points increase, the market decided it's pretty neutral. And so when we were looking at this move and we had started to have that downturn up here, right, the move started to play out, that expansion to the downside. And then we kind of leveled out around where the Fed decision was. But this move wasn't over yet. The volatility move wasn't over yet. All the indicators were still pointed down. It's a very technical market. Lots of whale games going on, institutions trying to liquidate each other. It was very natural to assume that we would get a push down to that 786 because it was so close. And so what I say 3 days ago I mentioned we're probably going to consolidate in this range. Our push down, this huge drive, right? The majority of this move, it was that 40% drive down, was probably burnt out. We might get a push down to 18,000. That's what I said. We got to 17,500, but I was targeting this 786, right? And so it played out, and now we're just coming back to that consolidation area. And guess what? That's exactly what we did here, right? Exactly what we did here. You can see very similar setup. Similar to what we did here. I mean, there are analogies elsewhere. But the key point is that this wasn't unexpected. This is totally in line with the market being in a macro downtrend. And people can get very excited on days like this. But just to be aware that the move that we're seeing right now is technically no different than the move that we had up here. And if you look very closely, right? Let's go to let's go to like a 4 hour. You can see we have this diagonal here. And we broke down from it, kind of tested it a bunch of times, got a crazy wick low, and then popped up and then used that as support. What are we doing right now? It looks like we're just playing out that same move. Again, like we basically made an analogy to what we did up here. You can see my indicators. It's thrown on the screen there. They're almost identical setups on the MACD, on the RSI, on the Stoke, on the volatility, and then just miscellaneous oscillators. Really, you only need like 2 of these to figure it out, right? But you know, I just have a couple extra for confluence so that when I'm talking on these videos, we can understand a little bit more what might be going on. And so look what happened over here. If this is an analogy, right? If this little epoch over here is an analogy to this one, then it would suggest that that this pop-up is going to max out somewhere, you know, I mean, let's just say like let's just give it the benefit of the doubt. Like it could go all the way up to 23,000. But honestly, I would suggest probably 21,000. It may even be maxed out. Okay. I mean, maybe not. It has room to go. But, you know, you can see like this one kept bouncing up right on the MACD here. But when it was doing that, it started to go sideways. Because again, what we're doing is we're experiencing volatility in a corrective measure. Right? We're having a corrective phase. And it's kind of a technical contraction of our expansion to the downside. So this is just a market update for you guys. I just want you guys to understand what's going on here and not feel like you need to FOMO or that you missed out. Most likely we're going to test the bottom of this range anyway at some point. All right. See this kind of pattern here? Like something like this, right? It may not be exact, but might be something like that. And, you know, where could we have potential, you know, potential shifts like right here, just like this kind of, you know, pullback to the, you know, middle of this drop. Maybe at the end of the month, let's say around the June 28th, let's just say June 25th to June 30th. Why? Because the PCE data should be coming out around then, I believe. Okay, I'll double check before we get there, but I believe it's coming out at the end of the month in June, or pardon me, yeah, June. And then if we have really good news, maybe we are going to pump from there. If we have really bad news, we might still pump, you know, or we might have some type of reaction. Who knows what we might do? Most likely we drop if it's really bad news. But if it's just neutral news like it was last time, maybe there could be a fake out pump. That's what I wanted to say. And then as we get closer to the CPI data and new information comes out, if it just continues to be bad, then we'll see a similar type of arc down, and we're probably going to head towards that 886. If the news is good, you might start seeing us pushing up, right? And getting some type of bullish posturing. Of course, be careful for a rising wedge that might be kind of a fake out, but we can discuss that when we get there. Anyway, we might end up putting in a little bit of a range. I would just suggest for perhaps the next week, maybe week and a half. Let's see, how long do we have? Yeah, we have a week and a half. So perhaps for the next week and a half, we're going to put in a little range. It could be more or less than what I've drawn out here. It doesn't have to be identical to this. It could be a little bit more extreme. This fall was a little bit more extreme than this one. There's still some well games going on, right? There could be some, squeeze plays and some, you know, uh, short squeezes and long squeezes. There could be liquidation events. There could be all sorts of stuff that goes on. But are we gonna have a V-shaped recovery right now? Not likely. Not likely. I mean, if it did, it would just be incredibly shocking. Incredibly shocking. I would like to point out, I don't know if you guys can see this, but on my chart, yeah, you can see it if I zoom in all the way. You can see I've got kind of these, this kind of like lights lighting up. Had a couple over here. What those suggest is a potential bottom for the market. I don't want to excite you too much, but I'm starting to get signals that we might be getting close to the bottom of the market. Okay, let's put this on the daily. You can see we got a lot of these sparkles up here. Like every candle's got a sparkle down here. And we hadn't had any until we got into this region. Why is that significant? We got sparkles down here at the COVID low. We got sparkles down here in the 2019 low, right after the 2018 move. And we got some sparkles. This was kind of a fake out, okay? So this isn't a perfect system. I wouldn't rely on this system. I'm just showing you that it's a potential positive sign that we're getting to a very significant low that is starting to fire off some of these things that have been fairly reliable. Fairly reliable. So I'm trying to figure out the best system for determining the bottom. Haven't found it yet, but this one is very interesting. We don't have we're popping up on the RSI on the daily, obviously, getting a nice push, but the demarker here is not as bullish. So we'll see where that goes. We'll see where that goes. The MACD obviously is starting to slow down. This can obviously become a fake out where it still, just makes like little red mountains. And so it might not be ready to cross over or anything. It says 21,255 is the number to beat. So basically this wick right here. If we can get above there, then maybe maybe there could be some bullishness, temporary bullishness returning to the market. Otherwise, this is just basically a reaction to this dip down. Not a big deal. I'm on the daily. Look, this candle dipped down, we popped back up. That's all. It's kind of a liquidation event. We popped back up. And let's see here. Just want to double check our Stokes to see if we have that positive. Yep, we do have the positive slope. And we got a nice kind of double bottom on it. And on the daily, when we match that positive slope with the corrective pattern, yep, we can see that that's what pushed us sideways. And then the Stokes just started to turn sideways. So we'll see if this flattens out or not. Give it a couple more days. But again, things look stable. They look like they want to stabilize. It looks like we're kind of doing a repeat of this pattern, potentially going to go into a little holding pattern. Exactly what I said 3 days ago. I said we're going to probably consolidate at this price range, but perhaps with a wick down to 18,000. And there you go. Like magic, man. The power of TA. Sometimes this stuff actually works, right? Let's see, 21,255. So, okay, let's go ahead and just move over to the dollar. Let's just see how the dollar's doing. The dollar's still looking pretty bullish. If we just, we're kind of just putting in a potentially a higher low, and then we might continue to pop up. But this doesn't look like it's slowing down yet. I mean, what can you say? It's just oscillating its way up, right? Stocks are very much in danger of still continuing to fall. If we are in kind of a support, we got an area with kind of support over here. You can see these touches. These kind of wicks, this kind of area right here. This bounce, nice bounce off of this. So we do have a little support area here, which could potentially take stocks just to do a little relief rally of their own. And that could aid Bitcoin in just either having a little bit of a relief bounce or going sideways. Okay, so it looks like, unless we just have like a bloody Tuesday, right? It looks like stocks could potentially help Bitcoin just put in a little bit of stability. Take that stuff off. Not all the charts are necessarily the same. Some of them have a little bit more down to go to find support or stronger support, although it's pretty frail. These things like just shot up, right? Oh, that's okay, this one. Okay, that's at support. Oh, the Russell is at a nice support area. That's interesting. It's got a lot of good support down here. You can see where it made like one of these corrective moves before, and then it had a major bounce off of these levels, just like where we are right here on the Russell, that could be a very good sign for a potential relief rally in the markets. I mean, the Russell was pretty much the one that fell down the hardest in the beginning of the indices, of the stock indices. And so if it was the first to bounce, pretty good, even if it was just like a temporary bounce, maybe the rest of the market would follow. Just hypothesizing, I don't know. But we're just looking for some hope here, right? Because while the Russell had its support, nice and high up here, a lot of these other indices still have a way to fall before they start getting into these type of trend supports, which isn't even the strongest of support, right? It's like another 10% maybe. Let's see, what would that translate on Bitcoin? Another 10% down, let's say. Just take the middle of that range. It's gonna just bring us back to the 786. Of course, we're bouncing, 10 to 20%, so that makes sense. So perhaps this is a good bouncy area, right? Maybe that was the bottom. Maybe it was. I mean, we can always have hopium. Let's see, what would be the equivalent? I don't think I can draw what stocks have. Maybe this. Right here. Yeah, like this. Yeah. Something like that. So if you guys want hopium, maybe the charts can bounce. Maybe there's another drive down, but maybe we get a bounce zone kind of in between the 786 and the 886, maybe around $15,000. And then you can watch my last video, my previous video, for the really extreme low cases, okay? But if you just want a potential bounce area, maybe that 14,000 to 15,000 is still a plausible target. And of course, I still have that on my buy zone, DCAing in for trades, right? For trades. I will not buy to hodl, and I made this very clear in the last video. I will not buy to hodl unless we have an accumulation pattern. There's no reason to just hodl randomly in a market like this. The world is crazy right now. Just absolutely crazy. And that target number, again, like it lines up on this alpha channel that I have carved out here, which is where the COVID dump went to. So it wouldn't be surprising, the drop here was aligned, the drop here was aligned, the drop here was aligned. All the major drops were aligned, right? The main price action here was aligned. And if we have a wick down to this, area, it would be aligned. The capitulation area was aligned with this white line and this yellow line between here, right? You see this move? And then the blood line, the red line, is what eventually ended up being our low. It wouldn't surprise me at all if we wicked down I'm going to change the color of this because I have maybe like that. Still hard to see. Well, whatever. Let's just turn off these alpha channels. It still wouldn't surprise me if we wicked down to this area and that would be the bottom. Assuming that our inflation data looks pretty good. If the inflation data looks pretty good in a couple weeks, maybe this is going to be the bottom. Just my hypothesis. And for the crazy numbers, of course, I'm looking at all of these levels as potential. Of course, we've passed this one and we're in this one right now, right? Kind of bouncing between those two. You would have caught that drop if you were using my DCA box here, but now we're over here. All right, look at that, right to the bottom. Right to the bottom of my DCA box. Look at this one, right to the bottom of my DCA box. Right to the bottom of it. Beautiful. Beautiful. Right? This one, it grazed the top. This one, it got the middle of it. And maybe we get one more, maybe we get one more and maybe that's the bottom. And then who knows, perhaps we could get this 11, but I'm not going to be targeting any specific number. I really just want to see the accumulation pattern before I consider putting any significant money into this market. This type of accumulation pattern. This type of accumulation pattern. I think this was just dramatic because the Fed was pumping money. This is more natural. So let's look for a natural pattern in these levels. And stocks have to be putting it into. All right, guys, don't want to make this one too long. It's already been pretty long, but I think we can just very briefly. I just want to remind you, CME closed at 20,000, approximately 500. So if we're in the 20,500 area, that's perfectly fine. It doesn't mean we can't drive down lower again later. And maybe they just want to move CME and 24-hour exchanges together if we move down. Potentially we could have a bounce, right? If we start getting good news and so maybe they're trying to sync up because they want to bounce together, right? After having liquidated a bunch of these institutions and things. We have a very realistic number here for a potential bottom around 14,000. But we could have seen the bottom already. It's possible that that was the bottom that we just saw, that 18,000, that I called like 3 days ago. And then we saw it the next day. I was expecting it to happen the next week, but we saw it the next day. And, that 18,000, maybe that was the bottom. Or maybe we're going to just have some type of crazy terrible inflation data, and then the Fed increases interest rates by 100 basis points, and then we get driven all the way down to this trend line because it works proportionally to stocks, right? Proportionally to stocks. There's like an algorithm that Bitcoin works on. And so if stocks dip a certain amount, Bitcoin moves about 2 to 3 times whatever stocks move. It can't be helped. There's no profit or loss for this, this type of asset class. So they just have basically ratios of risk, right? Hope that makes sense. What I'm saying is Bitcoin could fall a lot harder than you think. But if stocks can find support, then this is a pretty realistic area that we're in right now. Historically speaking, yeah, we broke the previous all-time high, but it has nothing to do with anything. That's just a myth. That's just something that people say. It's like, sports players that wear the same underwear every game. You know what I'm saying? It's like it's just some garbage theory, right? It's just astrology, for men, right? So like if we continue to fall below that all-time, it doesn't necessarily mean anything. People are putting too much emphasis on that. Let's see. We got stocks. We got our all-time high. The RSI is nuts, right? Let's go to this chart. Look at this. Look at this. I'm gonna put it on the weekly. Look at what I found. Just pay attention to the green line. This is kind of the range that we're playing. Let's see, can I do an arrow or something? I mean multi-shape arrow. There we go. Path. So we went down, up, down, up, down, up. Boom! Right at the bottom. We're right at the bottom. This was a parallel channel. It's a parallel channel, guys. This really does suggest we could be at the bottom. There's only been 1, 2, 3 moments like this. I don't care if people think that this is kind of astrology for men also. We're technically very oversold relative to all of our previous moves. If the stock market manages to hold, this asset class can pump. If the stock market folds and collapses, then this asset can go lower than you think, right? Because it's a garbage asset class. It's extremely high risk, very little function, no profit or loss statements. A lot of criminals working in a lot of these projects, scammers and all that stuff, right? And so it can go lower than you think, right? But just logically speaking, if the stock market does catch some support, this thing is so primed to go. You can believe we're gonna pump. Like it's not dead. People who say Bitcoin's dead or the crypto's dead, I mean they could be right. We could enter a crypto winter, which would correspond to stocks having a really bad time for a couple years, right? Maybe even many years. But if stocks find their floor, as long as we're in this range, like we're looking pretty good for a pump because a lot of people are going to be saying that's a really great value and they're going to all join in. As soon as they realize that stocks found a floor, as soon as they see some good inflation numbers, as soon as the Fed starts backing off on the rates, the 75 basis points, maybe they say 50 basis points on the next meeting. As soon as there's any settlement with Russia, I mean, it could take years for that war to end. But if it ended anytime between now and whenever, most likely we would get a nice pump in the market and crypto would go along with it, assuming we can hold this floor. And we're not at the bottom of the floor yet, right? Just focus on the green line. So that would suggest that we do have room. We do have room, right? Before people think that this structure is broken. We could get to that 886. We could go halfway down between the 768 and the 886. So soon, guys, soon. Then it's going to be up to you and your own risk management, right? If we start seeing some type of accumulation pattern, it's going to be up to you and your own risk management. You're going to have to say, how much am I willing to put in? Knowing that the world is kind of weird right now. How much am I willing to put in? Because all I can tell you is some technical levels. I can only suggest, probabilities of what's possible. I can't manage your finances or anything like that. You're going to have to be the one who pulls the trigger, and it's going to be your responsibility to get it right or if it's wrong. And of course, we are looking at to see if we can get any type of a buy signal out of the hash rates, right? Nothing really yet, just capitulation going on there with the miners. I just leave it up here at the bottom of the screen just to, if it ever flashes blue, you can point it out to me. I might miss it. Let's go to the 6 hour. Not bad, not bad. Just again, we might get a nice trading range for for a week or two or something. The only thing that I would really warn about is that these institutions are like sharks in the water, just like wanting to have a feeding frenzy. And so just remember, guys, that like they're trying to liquidate each other. They're trying to liquidate institutions now. They're not trying to they're not trying to liquidate just people trading on exchanges. They're trying to liquidate entire institutions, like billions and billions of dollars they're trying to liquidate. And so these drops are getting sharper and sharper, and we could get caught off guard, okay? Like they may not give the next institution 2 weeks notice. They got like a nice month here. They had a nice like 3 months here, and this obviously was a huge run, right? But this time frame is getting shorter and shorter. So maybe we've already put in a week or so. Maybe we've only got a week or two left, and they may not give us a full month before there's another drive down. So just be careful. Just be careful. We're going to be watching the volatility, okay? We're going to be watching this. See how it plays out. There's no rush for anything, guys. Don't feel rushed. You're not going to miss out. If you made it this far and you have some capital, you have some money in your pocket, you're doing really good, okay? You guys are going to make it. The other guys, you know, just continuously DCA'd from 69,000. I mean, they're probably out of money, right? They've probably been liquidated. That's how we can be in a capitulation event to begin with. They've probably been liquidated. Some of you might be in that situation and you're just thinking like how long until we can recover. I would say if you're in the market already and you have your hold positions and they're just like super high up here, just risk to reward for myself personally. I can't give you financial advice, but risk to reward personally, I would just say, let's see what happens with the Fed. Let's see what happens with stocks. Yeah, the charts can go lower. It could always go way lower than what you would think. But there's a good chance that there's going to be a relief rally at some point. It may not be the all-time high, but it could be something significant at some point, right? In the next 6 months at least. Charts just don't go down. They also bounce, right? And so I would just say that You know, when we're having these moves that are just driving down, it's not the time to just panic and sell all of your stuff. No, no, no. You want to you want to panic and sell all your stuff when you're about to see it falling down, right? Like, and then you can buy back, you know, at the bottom, and then you get a bounce, and then you sell again, and you try to make a little profit back. So this isn't over yet. What is this? That's weird. Just haven't seen it in a while. Oh yeah, because they capitulated, so the moving averages got crossed. We're looking for this to turn green again, this line to turn green again, and then we're probably going to get one of these buy signals. I just pay attention to the dot. Never really took a look at the lines before. How about Bitcoin dominance? Getting a little bounce, finding support. Not much. Not much in this area. A little bit back here. There's a chance. There's a chance it can bounce up. Got this kind of slope here. Looks like it's just tested it. It could bounce up. Nice place to bounce if we do bounce. That could suggest a possible bullish run for Bitcoin. We'll see. We'll see. It doesn't have to. It could also be just sideways action. You know, it could be sideways action while altcoins bleed down more, right? And that would increase Bitcoin's dominance. It doesn't have to be a run. But it would be nice if it was. USDT, oh, hit my target and then got rejected. Interesting. Okay. Hit pretty much perfectly. Look at that. Look at that. Nice wick right there. Basically, to the T. But this thing still looks bullish, right? This thing doesn't look bearish at all. This right here looks like that inverse of a Bitcoin, right? Yep, we had expansion to the upside on this one, and it is. It doesn't look like it's done yet, to be honest. Maybe one more push. It could be done. What's this one? Pointed down, yeah. Probably done for now. Just a corrective move. Just a corrective move there. Probably not a full-scale reversal or anything, but just a corrective move until the next push or perhaps rounding. That's important because the amount of USDT that's out there means that people basically sold their coins, right? And so now they're holding USDT instead. How about total market cap? Oh, oh, it came so close to my number, my range, right? So I want here. Let's go. One more big drop down. Let's do it. Let's do it. Very confluent with the other things that we've been talking about. So it could go lower. I have no idea. No idea what's going on with these lines. What is this one about? All right. But my target's 650 billion. There's room to come down. Could we do 200 and let's just say 300 billion? Maybe, yeah. Some crazy event. Just don't know if that's gonna happen. Not sure. Let's check out our MACD on the monthly. Still coming down. No signs of softening yet. This is just exponential to the downside. You'll see the softening, right? It'll curve. These will start curving in, but just exponential drop on the monthly. 2-week? Oh, it still looks ugly. Ugly. Yeah, everything looks pretty ugly. So only the daily is really softening. And then you can see we had that crossover on the 6-hour and the 8-hour. And the 12-hour could get rejected, so just be careful. 12-hour could be rejected. We'd need to hit 22,700 in order to really cross over. So, that's pretty much a stretch goal, right? 22,700. Yep, up here, these wicks up here, which makes sense. We take out these highs. Don't even need the MACD to tell you that. We take out these highs and we're pretty bullish. We take out, where's that 21, 250-ish, right? We take out this one and we've got a pretty good fighting chance. So this is the range we want to get into if we're going to be bullish. Okay, let's just call that the bullish range. Got to get up here. And if we can't do that, then probably we're just going to consolidate sideways, just like up here, and then perhaps fall off a cliff again. And then maybe we'll have the real capitulation, right? It could be we already had it. but most likely we have one more, just in my opinion. Just my opinion. You saw the MACD on the monthly. You saw all those things. It looks really bad, right? It looks really ugly on the higher time frames. So we would need some type of mega pump, which could happen with stocks. If stocks pump, we could get that. But all right, guys, just wanted to go over the charts and things and also offer that kind of bullish perspective. You see, we got the sparkles starting to light up our candles, suggesting we're getting pretty close to a bottom. Can't tell the exact bottom, but we only got like one sparkle up here on the 12-hour. Let's see the daily. Daily got a bunch up here, so kind of a fake out. But you saw during the last cycle, we had a fake out area also a bit higher, and then we had the real one. So could it be that we had the fake out one area higher, and now we're going to be putting in the low that's going to be the real deal? Or is this just a continuation of this fake out, and then maybe we need to get a real bottom put in, right? Well, we'll see. We'll see. Nobody knows for sure. We just have those areas to target. But that was your alpha for the day. Stay safe and happy trading.